Okay. Hi, everyone. Good afternoon. I'm Tara Brown. I'm with Self-Help Credit Union. I do community engagement in Western North Carolina, so it's my job to talk about everything self-help does, but I'm excited that we have some other staff from self-help to talk in more specific about all the important things we do related to housing. So we have Tracy Thompson, who's going to talk to you about our Affordable Housing Loan Fund, which is to create and preserve affordable rental housing here in Western North Carolina. We have Mary Margaret Lecision, who will be talking about our real estate development projects, which we hope we can do to also support more affordable housing and homeownership here in the region. And Joanna Barone is going to talk to us about our home lending and all of the products and programs that we have to support homeownership for people who might not be able to access it through other lenders. So thank you all for being here. I hope you're enjoying this food from Biltmore 67. Love them. And thanks again to Land of Sky for having us, Matt for inviting us. It's a great partnership. So I'm going to talk a little bit about the history of Self-Help Credit Union. Raise your hand if you've heard of us, know about us. Okay, maybe like half and half. That's great. So Self-Help was founded in 1980 in Durham. It was originally created to encourage and support worker-owned cooperatives as industry was leaving the state at that time, textile industries, furniture manufacturing. We were looking at ways to support economic development for people that were basically displaced workers. So that's always been at the heart of what we do, serving people who are left behind traditional financial systems, traditional economic systems, and figuring out ways to do economic development there. We always love to tell the story that the first deposit in Self-Help Credit Union was a $77 donation from a bake sale. So that was the first capital that we ever got, but we've grown a lot since that $77 and our bake sale days. We now have $5 billion in assets under management, and we are a family of 6 different nonprofits, 5 different nonprofits now with the most recent edition of Climate Capital, which we can talk about a separate time. But I work for Self-Help Credit Union, so we have 6 branches here in Western North Carolina. Through there, we have all the traditional products you would expect a credit union to have, but we really try to make it fair and accessible, low fee, high interest, all of that, and support individual financial stability through credit building and things like that. So if you ever have potential clients who need to work on their credit before they're ready for homeownership, they're looking for a way to build savings before they're ready for homeownership, it's really great to send them to Self-Help because we have those products and some in-house financial counseling as well. We have Self-Help Ventures Fund, which Tracy is going to represent and talk about, which allows us to do loans that can be a little riskier in terms of community development. So our Affordable Housing Loan Fund is one aspect of that. We have the Center for Responsible Lending, which advocates at the state, local, and federal level against predatory lending. So we do a lot of research and policy advocacy. And I mentioned Climate Capital, which was something that was created under the previous administration to work on different aspects of green lending and is a little, up in the air at the moment. So Self-Help came to Asheville in 1988. You might have seen our commercial building in downtown. It's 34 Wall Street, but there's also an entrance on Patton Avenue. And that was a really great partnership with local philanthropist Julian Price, who encouraged Self-Help to come here and really work on that community economic development, help revitalize downtown and support other business growth. And then when the mortgage crisis happened in 2008, we really switched to focusing more on a lot more affordable home lending rather than small business lending, because there's other CDFIs that do that, like Mountain BizWorks, for example. So we've really built out our mortgage products, and Joanna's going to talk about that in a little bit. But at the center of all that we do is our mission, economic opportunity and ownership for all. And our name is Self-Help because from the beginning, we've witnessed the talent, determination, and creativity within communities we serve. Our name reflects the reality that we're investing resources in people who help themselves when given the opportunity to succeed. So I'm going to pass it over to Tracy. Any questions generally about self-help before we move on? Okay, I'm going to pass it over to Tracy to talk about our awesome affordable housing loan funds.
Thanks, Tara. Yes, I'm Tracy Thompson. I am the program manager under our commercial lending team, administering the Western North Carolina Affordable Housing Loan Fund. And just to kind of touch on how this presentation even started, Matt and their team had worked with a consultant a couple of years ago, and one of the findings from the study they did around housing in the region was an idea to create a regional revolving loan fund to assist with developers that are creating the housing products. So this came to fruition. So in 2024, Dogwood and Self Help Credit Union partnered to create this loan fund, and it does operate under Self Help's Ventures Fund. And the program's purpose is really around public-private partnerships and leveraging subsidy dollars, as well as maximizing community benefit. And just a little high-level intro to what the product is. Western North Carolina Affordable Housing Loan Fund aims to create and preserve affordable housing in the 18-county region of Western North Carolina. It provides financing for nonprofit and for-profit developers to acquire, create, refinance, rehab, preserve affordable housing in Western North Carolina. Eligible projects include new construction of affordable rental housing, rehab, preservation of affordable housing, and LIHTC projects work well with this product as well. The offers are flexible debt financing to create and preserve the housing. And the two products we'll jump into are bridge and mezzanine financing products. And this enables developers to save money that can be used to preserve housing. And I want to note here, there's no prepayment penalty for affordable housing developers trying to access these loan dollars, and low origination fees as well. So Tara touched on earlier the Ventures Fund that's housed within our self-help umbrella. And I just wanted to dive a little bit deeper into what that looks like. Our Ventures Fund actually houses all of the affordable housing loan funds that we have across the state of North Carolina. So the Western North Carolina Affordable Housing Loan Fund is not the only one in North Carolina. Why the Ventures Fund? It has a large balance sheet, which is good for leveraging opportunities. And it's not regulated like our credit union dollars, so that really allows for a lot more flexibility in lending. Our credit union regulations limit the loan to value, prohibit subordinate financing as well. So with our more flexible lending under the Ventures Fund, we can offer things like non-recourse debt options, higher loans to value, subordinate financing, and lower interest rates. So we just act as the fund administrator for this fund in particular. Affordable housing financing is complex, as I'm sure y'all know. There are persistent gaps for developers trying to make this housing happen. With the lower rental incomes, it creates an increased need to find equity to pull off the projects. With the lower rents, they have low cash flow and therefore can't pull in as much debt. So affordable housing projects can't take on that 70 to 80% debt like the market rate housing can. And then you have soft debt come in with grants, tax credits. They try to come in and help fill the gap. But however, they only cover a portion of that gap. And the gap is growing. So we have stagnant incomes, higher construction costs, higher acquisition costs, less government subsidies, and higher interest rates. This is where the loan fund steps in, tries to help out. And just to kind of hone in on the two buckets of challenges for affordable housing developers, acquisition is one bucket. So if you have some land that's available, you can't have an affordable housing developer come in and say, give us 3 years to find the money to purchase this land. That's usually a non-starter. And so we need ready, cost-effective financing to acquire and hold the property. And then the second bucket is filling that gap for these longer-term construction to permanent loans. So when they need to actually build the housing, right? And conventional senior debt only covers maybe 40, 50% of the cost, and that still leaves that substantial gap. So how the loan fund helps out. With acquisition, we have what's called a bridge product that allows affordable housing developers to buy and hold the properties while they secure long-term financing. And then we have our gap product or mezzanine product. And this is all common. You see this with the low-income housing tax credit projects around town. It helps to fill the gap on senior debt. So it becomes part of what they call the capital stack. And then the product details of the two products in our loan fund. We have bridge financing. This is that one that's just meant for grabbing the property, maybe land banking if you need to. So this is a shorter term loan, 5 years, interest rate at 2.95, interest only, no prepayment penalty. And for nonprofits specifically, we can loan up to 110% loan to value. And for both of these products, they need to serve affordable housing households. So 80% or below. And then the second product is that mezzanine product. This is what we would call the gap filler. It's usually in that second lien position. This is meant for construction to permanent, so 15 years longer term, interest rate at 2.45, same thing as bridge, interest only, no prepayment. For this one, because it's meant to be one piece of the pie for construction to perm, we loan up to 30% loan to value. And again, serving affordable households. This is one of the ones we closed on in June of 2025 out in Brevard. This was, you can see all of the pieces that have to come together for larger affordable housing projects. So you had low-income housing tax credit. We had local Brevard dollars in it. We had home HUD funds in it. And they also had a first mortgage as well, but they still needed that last piece of the pie. So that's where we came in with the mezzanine loan. And that one was $950,000 for 42 units, 100% affordable. And just a reflection on some of the other ones we've been able to close on across Western North Carolina. We recently closed on one in Haywood County, 84 units. Again, 100% affordable, 40, 50, 60% area median income. Chamberlain down in Ruffton with 27 units. That one was interesting. It's a mix of single family and duplex. And we spoke on Fairhaven. Henderson County, we closed on 60 units, 100% affordable, multifamily. And in Buncombe recently, senior housing, again, 100% affordable. And just if any folks in here are in development or speaking with affordable housing developers, the match for us is mission alignment. So what's their reputation like in the community? Are they focused on affordable housing needs? They'll need at least 2 years of operating history, ready or near ready projects. It's important to know that this is not soft pay. Sometimes there's a little bit of confusion. Or cash flow pay. It's a loan, so it's a hard pay, just interest only until the end of the term. Yep, and no prepayment penalty. And eligible uses are acquisition, construction to permanent, renovation to permanent, permanent financing, and refinance. And I'm available for further questions. There's a lot more I could talk about on this, but I want to make sure to share the space with my colleagues. I have materials and cards in the back and available to chat. But I just want to pass it on, say thank you, and pass it on to Mary Margaret, who is part of our real estate development team.
Nice to meet you all. I'm Mary Margaret Lecision. So Tracy talked about one aspect of real estate development, which is like, how do you finance it? But as you all know, real estate also encompasses a million other areas of expertise. So I come to you with a career in real estate through many different channels, probably similar to you all. We all have different aspects, different expertise, and all sorts of connections to real estate. The cool thing to me is that we could probably all say we know some, and yet it's all a very different experience. And we all need each of us to actually make projects come together. So I am working on the real estate team. So I am a developer. I come with urban planning experience, land use, zoning reviews, planning boards, a lot of paper, and a lot of time. So I work on what you would call the pre-construction. Not always the most glamorous part, and it's often glossed over, but I work on anything prior to the dirt turning. So it's a lot of problem solving. It's a lot of design. It's a lot of consultant engagement. So all those things are usually trying to mold the nothing into something. So whether it's a building that's underutilized or a home that's not operating or something, or a piece of land, and everyone's like, we want to do something better. But what is that? Sometimes you don't know because you have things that are like competing interests. And so here at Self-Help, we try to take a mission-driven approach to real estate development, which is why I'm here. I sit in Hendersonville. I joined about a year and a half ago, and I'm very happy to be in a group that is mission aligned and community focused. And we have over 30 teammates with specialties across the board. So some have the brokerage background, some are construction managers, like you name it, they can help you with leasing. They think through the marketing and then all the other aspects of who is actually going to use this property. Because at the end of the day, that psychology and the comfort and like the experience you have when you leave is more impactful and will last much longer than anything to do with the pre-construction, the construction, or, that transaction. So at Self-Help, we have over, I'd say, 20 to 30 years of experience with these projects, and they take a long time. So while these numbers look impressive, just know that it has taken many years and many people to work on like 15 communities. It has taken a lot of effort to get the right businesses to complete leases and fill the spaces to meet our mission here. We are also expanding our network and our impact in Western North Carolina, which is why I'm here. So I'm very proud to say that a lot of what we do is on the community interest side. So like 34 Wall Street, that is a prime location in downtown Asheville. We could very much choose to say we need the highest payer in the building, but we have chosen a mission-driven aligned approach. So we are very careful with our funds, but we're also very careful with the outcome. So we believe in inclusive and equitable real estate development. And I would say lately, that's been affordable housing driven. So, real estate's all kinds. We have experience in low-income housing tax credits, new market tax credits, historic tax credits, affordable housing loan funds, and all different financial sources. And we are looking to see how to make these things all come together so that we can offer that better experience in the end to the community. So part of that affordable housing is revitalizing neighborhoods. And that could be a one building that changes, a simple corner and transforms everything. Or it could be a neighborhood of multifamily utilizing these different financial sources. And so my focus and our team's focus is on housing. So we are looking to expand our portfolio to serve more residents and to ultimately build more housing to help with affordable housing. And so we choose partners to help us. We choose nonprofit partners. We choose mission-aligned people, and we choose projects that advance community interests. So if this is not a welcome experience from the community, then that's a first thing that says, no thanks. This is not worth the many years we're going to have to invest to make something happen. So we look for nonprofit partners. We are always trying to serve the greatest people with the lowest incomes imaginable, but we also have to balance those interests of paying the loans and adhering to other aspects. So We are looking again to find partners that may have land. So that could be faith-based, could be local governments. It could be a number of other avenues that already have parcels that want to do something else. We look for developers who are on the nonprofit side because our goal would be to own affordable housing so that we can have it in perpetuity for the greater community. And so that could be done through development. It can be done through acquisition of naturally occurring affordable housing. Throw another acronym and abbreviation out there called NOAA. It can be done through partnership, and it can be done through a number of other avenues. So the creativity is all over the place. And that's why I'm appreciative of this team and their focus. So from there, we luckily have teammates across the country. Sorry, there are no pictures here, but basically we work nationally. But my focus and our greatest impact in this area is going to be our neighborhoods around us here. So if you have those people in mind that might be able to work with us to help us make that impact, we would love to talk to you. So again, landowners, nonprofit partners, developers, or someone else who just wants to learn more, we're happy to have that conversation because this is, as you guys all realize, real estate. It gets real narrow and then it opens up and there's like a whole other world. So I love housing. I love talking about housing, and I am so glad that Self-Help and I have found each other. And so I wanted to just leave you with our contact information because again, this is not going to be just solved with, pieces of land next door. This is something we can look at nationally, hopefully within Western North Carolina, but we are available and open to discussions. So here's our contact information. I have cards in the back and also hope that this is the first of many conversations because this is a big topic and a big need in our community. So thank you so much. And now I'm going to turn it over to Johanna Van.
Thank you. Well, good afternoon, everybody. Thank you for coming. We're really happy to have this space, and we want you to ask all the questions, get all the answers and all the information we can provide. That's what we are here for, right?
Yeah.
So a little bit of myself. I'm Johanna Baron. I'm the mortgage loan officer for Western North Carolina. I've been working for Self-Help for 5 years now. I was in Illinois as well with Self-Help in the federal side, and then I joined the Western North Carolina. What do? We provide help for everybody. We want to be that support that everybody needs. We support single family, single mothers. We also have loans for Latinos, Black people, low income families. We have all the grants available in the county and in the federal sites too, and we can layer them up in the loans to just help making everything affordable. We can do purchases, refinances with cash out. Our DTI, we can go up to 50%. We have a product that we can do an LTV for 105. Our minimum credit score is 580, but if you have 0 credit score, we can also do the loan. We can do alternative credit, and we don't have PMI from any of our loans, which is really good. That only helps the financial institutions. The minimum contribution for some of our products is 1% out of the purchase price. It depends on the property. So for manufactured homes, the minimum investment is 5%. And as I mentioned, we also have down payment assistance. Every year around January, February, we have a fund from the Federal Bank of Atlanta that is for first-time home buyers. And it layers up in different sections. If you work in the health industry, if you work in the education, if you're a first responder, a firefighter, a police department, you don't basically have to be one of those, but if you work in the hospital cafeteria, you qualify for this grant. This grant can go up to $20,000 for down payment assistance. We also have, this year was $17,500 for first-time home buyers. These funds are forgivable. You don't have to pay them back. The only requirement is to be a first-time home buyer. So many people ask, what is the best moment to apply? I mean, I always say now. Now is the time because that will give you the view, where you are, where you want to go. And just apply now. It doesn't take too much. Most of the lenders require the same things, but I always focus on the credit. You know, you don't want your credit to be pulled so many times. That affects your credit. So if you can provide your own credit report, we can use it for pre-qualification purposes. We just basically calculate your DTI and give you a scenario. We want you to have different scenarios. We want you to shop around, go with different lenders, see what you can get from each one of them. And if self-help is the place, we will help you. So we require 2 years of tax returns. If you have any other source of income, like Social Security, vouchers, if you receive child support, just bring all of those documents. We can build your calculation based on all of that. We provide loans for ITeens and Social Security borrowers. We will require W-2s if you get W-2s and the pay stub. If you receive 1099s, we will just require the tax returns. And if you bank with us, we don't require the bank statements. We can pull them internally. Or you can provide 60 days of bank statements. This is the product that I mentioned before, that it can go up to 105. What does that mean? That we can finance the closing cost into the loan, and the borrower will provide just 1% of the purchase price to the table. So what are the ways to qualify for this program? There's two different ways to qualify. The first one is to be a first-time home buyer and get no more than 80% of the area median income in the county. But if you get more income, and if you are a first-generation home buyer, meaning your parents don't own a house, you can also qualify for this. So we all have a whole bunch of manufactured homes in Western North Carolina, and if they are not recorded as a property or on a permanent foundation, they're not considered a home. So you will be a first-time home buyer, even if you have a manufactured home. So we will see everybody's picture and determine if you qualify or not for this program. This program allows us to use subsidy funds from self-help credit union to lower the rates. So if you are a first-time home buyer and you make more than 80%, but you're under 150, under 150% of your area median income, you will qualify for this program, and we can use those funds to lower the rate even more. So you will get the first-time home buyer rate plus the subsidy funds combining this product. Anybody has any questions about this equity? I know it's tricky. 2 ways to qualify: lower the rate, lower the funds, first-time home buyers, or first generation.
It seems like these are for newer homes, is that correct? Or
No.
is it for any?
For any, you can also buy a manufactured home that is no older than 1994 and use this program. The contribution will be different. So it will be 5% for manufactured homes.
And the Dolphin Foundation helping courses?
Not to this, yes, that will be a different program, and that will be under Tracy's.
Is only to assist affordable housing developers who are building multiple units to serve folks who fall under 80% area median income. So I'm just working directly with developers. Joanna's team is working with a home buyers. She's on a mortgage. So,
Okay.
so everything she's talking about here is for the purchasing a home.
Okay, and then I heard you mention, if there's other people that would be willing to help provide funding. So for example, I know like Buncombe County Schools, Asheville City Schools,
Yes.
people can't afford to move here and teach. Would that be someone that you could get in touch with him, what
Yeah.
something out with.
Yeah. And we also receive funds from Mountain Housing Opportunity. We can build those inside the loan to lower the loan. And those can be up to $50,000 for down payment assistance.
What can I do to help expedite that process?
You can start applying and I will build this scenario, then I'll send it to Angie Welsh, which is the person in charge of those down payment assistance programs. She will review your application and let me know what you need. So we work internally with them at the same time that we're processing the loan.
Yeah, they can't get teachers here because they can afford to live here.
I know it's
So,
like
okay,
everything is getting more and more expensive.
yeah,
Yeah.
all right.
Yes.
So the manufactured homes, do they need to be on a permanent foundation at the time of closing or
That is a really good question. We prefer that it's been on a permanent foundation for a full year. But right now, actually, I'm closing a loan on Tuesday, that it's an exception. This manufactured home is brand new, and the builder is providing the land and like so many different documents that support the building of the house. So our underwriting team is comfortable with that. We review everything and they made an exception, so it can be done. We underwrite everything in-house and it allows us to ask for exceptions. I'm really good at that. I've been asking for all of them. So it's like if the scenario looks good and it makes sense, why not? You know, you already have the no. You can always get the yes. That's
Since we've opened that box,
yeah.
I know a lot of people hit with a lot of manufactured home purchases, not only the year,
The year is
but
important.
also shared well situations, maintenance agreements. What are there any hard and fast? Good to ask for exceptions, yes.
Right.
Are there any hard and fast rules that they would not?
Well, I would say the year is very important. Our guidelines is 1994. We can potentially do 1993 if the house has been remodeled and if we can get a home inspection good. Maybe not older than that, but we will have to see the picture. For the road maintenance agreement, we have those so many, like so often that there's so many ways to clear that condition, like getting a deed or, you know, getting the agreement or seeing like the map of this whole development. So it can be done. So there's so many routes that we can show that it's doable.
What about like it's all a shared well with
Yeah, that works.
6 other homes, or
If it's big enough for the houses, yes.
and then the last one would be if there are additions to the manufactured home, but there is maybe a structural engineer's evaluation saying it's okay.
Yeah, that will be good. Yeah. If it's done correctly, yes. Yeah, not that they put just something additional and didn't get permits or anything like that. That'll be a no. But if they are correctly well done, yes. Yeah. We can all see the picture. Yes, definitely.
usually to your
We said 35 to 45 days. It always depends on the borrower, you know. The quicker you bring all the documents and the faster we can move the process, the better. I've closed loans in 23 days, but we just want to be safe and say 35. Yes. Anybody has any more questions? Let's see what's next. Oh, this is my contact information. I have my business card there. You know, like different questions come with different scenarios. I love to see all of them and kind of see what options I can provide. As I said, I like people just shopping around. That's the best way they know what they can afford. And it's basically their budget, so they know what they want and what they're looking for.
do you have this information like where we can print it or
Oh yeah, definitely. I can share. Yeah, for sure. If you give me your contact information, I'll share it. Definitely. And on our website, I'm pretty sure we have all this information as well, like selfhelp.org under mortgages. Yes. Yeah. Well, thank you, everybody.
So thank you all again. Any final questions about, yes, Matt?
Yeah. For Tracy too. The 21st Century Road to Housing Act.
Mhm.
I know it's brand new. I know we need to see how it actually gets implemented, but it seems like there's a lot of really good stuff in there for like affordable housing development.
Mm.
I don't know. You guys have dug into that at all, or?
Nope.
Okay.
Looking at them. I need to look further.
Yeah.
I was waiting to make sure it made its way all the way.
Yeah, it was amazing. It was a big priority for the realtors, obviously, been working on it for 2 years, and it was nice that something actually passed.
How do you see it?
Yeah, I mean, again, you know, there's more spending for light tech. They're removing the permanent chassis requirement for manufactured housing. They're doing more to incentivize people to buy into housing trust voucher program. Set up the home program, home funds. So anyway, again, I'm by no means, you know, subject matter expert after just a few weeks of it passing. And again, it'll be interesting to see how it's actually implemented, but it seems really promising, you know, if you're asking anything both for the stage, right? So.
Yeah, and that sounds like it's touching on a few forms of subsidy if they're supporting home funds, like you saw in the Fairway and Meadows, those are both federal dollars allocated locally. Usually through, well, here it's the city of Nashville, but it's through the Council of Governments west of us, but so yeah, any increase in subsidy helps to get these things off the ground, and good to hear about still supporting voucher
Yeah.
stuff as well.
And Tara, I don't think I realized how your what kind of advocacy are.
Mhm.
Probably that'd probably be a good resource for y'all to, you know, once they have a chance to digest it.
Absolutely. Yes. And we also do have a policy director outside of the Center for Responsible Lending, because that's only related to predatory lending, advocating against predatory lending. But no, so we do have another policy director, David Beck, who I love him, because whenever any of these things are happening, like they're trying to shut down CDFIs or what's going on with this housing, I don't have to worry about it or think about it. If I don't want to, I can just like close my laptop. I'm not reading that today. And then he'll give us an update about the outcome. And we also have our awesome summer intern, Sophie, who's studying policy at Chapel Hill, and noted that she might know more than any of us about what's included.
Very cool.
Yeah.
And the policy. It's great, and like she said, I understand, but I think a big thing that's going to be impactful for self-help with that is the increased private investment kind of ability, kind of like Mary Margaret and Tracy talked about, those public-private partnerships. So I think that might be a little bit more long-term, but I think that will hopefully allow for some bigger partnerships for affordable housing, especially. I think that'll be the biggest impact of it as well.
Yeah, on that note, that's what the fund's purpose is to leverage other dollars.
Sure.
So, because a lot of money is needed, you know, to build these projects.
Awesome. Thank you.
Are there any other questions?
As soon as we leave, we're gonna have.
Just take the card.
Yeah.
You're gonna have the question, yeah. What was this person?
A lot of materials on the table back there if you want.
And thank you all again. I know, we were in a housing crisis before Helene, and then after Helene, we've been going through a lot. I know there's maybe a slight downturn in the market right now. I don't know if you all are experiencing that, but I know Joanna has been able to close more loans recently, and that a lot of properties have been out of reach for our typical buyers for a while. They just were qualifying for a certain amount and couldn't find a property. So I hope now that there might be a little bit more of a match around that.
Totally forgot about the Western North Carolina Fund from the philanthropy.
Oh yeah.
We received through Helene these subsidy funds that we're using to lower the rates. So I'm putting them in all of our loans. The only requirement is to apply in Western North Carolina. Yeah, we'll layer them up. Yeah, I've seen rates that are like 5.25% with those subsidy funds. So that's a big deal.
Mhm.
The lower the rate, the better.
Well, thank you all. I guess I should ask if there's any questions online. I don't even.
Thank you.
Thank you.